Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is May 23rd, 2013. Alright, we got about an hour left in the trading session. And the purpose for me doing this video today is to really talk about what we've seen up into this last hour so far. And that is a lot of longs that had gotten really comfortable with this market, consistently trending higher and higher off of the November lows, and particularly so since November, where the market hadn't even put in a 2 days in a row of selling since April, since mid-April. So we haven't seen a lot of selling, and it's easy just to keep on buying each and every day. You don't get a lot of positions stopped out on you or anything else. So it's a very inviting market. And today we had, or yesterday we had the 30-point sell-off, and a lot of traders pushed it aside. I thought we might actually get a bounce today, just because we hadn't sold off more than 2 days in a row. It doesn't mean that we couldn't have sold off, but I was playing the odds. So I didn't get out a lot of my positions. I got out of one position. That was for an 11% gain in RLGY. But I did think that there was a good chance that we bounced. And I didn't know if that bounce would hold, but if we got that bounce, I would go ahead and tighten up my stops even more, because I've been tightening. That's what a lot of traders won't do, is when they're making the money and everything, they don't think maybe I should tighten these stops, just in case this market reverses and I miss out as a result. But so yeah, I had been doing that and everything with, but the one thing that will get traders more upset than anything is what we got out of the market today, and that was this huge sell-off in the very beginning, where we sell off 20 points, and that's on top of the 30 points that we sold off of after hitting like 1687. We go all the way down to below 1650. So we were at about 1637, 1635 or so. It's about 52 points at one point off of the highs from yesterday. So a lot of longs, that if they're adhering to their stop losses, they got stopped out. Some of them saw profits turn into losers, which is something that we always stress to our subscribers and to our readers to not do. To not allow that to happen. That's why we're consistently moving up those stops. But a lot of people got stopped out. I think we got stopped out of nearly everything, because we were only playing with about 1 to 2% wiggle room in most of our stocks. However, what really will twerk people off, and it's human nature, they want to see what the stock does after they get stopped out. So let's pull up one of the stocks that we got stopped out of today, PCYC. All right, it's up 3.7%. We had gotten in at 82.54, and this stock yesterday just fell all over itself. I thought maybe we'd get a bounce today out of it. No. In fact, we go all the way down to 79.74. My stop was at 80.97, so right around there. So let's zoom in on this some. In fact, let's pull up the 5-minute chart on this thing. Let's get rid of these Bollinger Bands too while we're at it. There we go. So the market opens up. We get stopped out right out of the gate, okay? It bottoms much lower, about $1 lower from where we got stopped out at. Traders are feeling relieved that they got out, because they say to themselves, well, I could have been losing $1 more had I held on to it. But then coming around 10 o'clock, we put a bottom in, and what does it do? It goes from 79.50 all the way up to 85.50. That is a $6 difference in the price of the stock. So what do you say to yourself? If you lost a couple $100, you're thinking I could be up $1,200 now as a result. So it's very infuriating for traders. But I'm trying to tell you, that's one of the worst mistakes that you can make as a trader, is to start thinking about the what ifs. Because see, you're trying to assign character, you're trying to assign personality to these stocks, and they don't have it. They're going to do whatever they want when you get stopped out. Some of them will go up, some of them will go down. When I get out of a stock, I have no idea what it's going to do after that. But I have to have the stop loss, or I am risking mass capitulation, because I never know what stocks are going to just keep on going down, 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 down after I get out. And all it takes is one stock to just completely ruin everything for you. So what I want to encourage you as traders is to not get caught up in what the stock does afterwards, because what that'll end up causing you to do later on is for you to hold stocks longer than you should, not get out of stocks when you should, to think that based on something that happened in a completely different stock in a completely different industry, and even if it is the same stock, that somehow that same price action is going to repeat itself. And every day in the market is a unique and different day from any other day that has ever happened in the history of the stock market. No stock has ever acted the same as another stock, ever. Okay, there might be similarities, but none of them have ever repeated themselves in the same way that another stock has to the T. So when we use technical analysis, we're looking at probabilities, okay? Probability suggests that sometimes you're going to be wrong. And when you're wrong, that the stock is going to rally after you get stopped out. You have to look at it from a pure probability standpoint. Now, when I got stopped out, to me it was more important to be disciplined, to follow the plan, to minimize my risk, because I only lost 1.9% on this trade. Now, I didn't know if we were in store for a 400-point down day on the Dow or a 30-point down day on the S&P. I didn't know. And because we don't know, we can't take chances and just roll the dice and say, oh, it'll come back up. It'll come back up. Because you know what? Every person that I've ever heard say it'll come back up, it never comes back up. Maybe it does with that stock, but eventually it wipes them out. You talk to me about the people who are still doubling down on TVIX right now. These guys, they're in at $60. Okay? They got a stock that's now worth $2. They think it's coming back up still. Oh, if we can only get this market to drop 20%. Somehow this TVIX is going to compound on itself day after day after day, and that $3 is going to get right back up at 60. And heck, it might go up to 240, and I'll quadruple my investment. I just got to be patient with it. Folks, let me just tell you, it doesn't matter what a stock does after you get out of it, because you know what? I care about where I stand with my performance at the end of the year. I do not care where I stand with the stock at the end of the year. I don't care about where I stand with Apple at the end of the year, or Microsoft, or PCYC. I only care about what I'm doing at the end of the year. Now, where I get those profits from, I don't care if I don't get the profits from PCYC. I don't care if I don't get it from Apple. I know I'm going to get it somewhere, though, and I'm going to get it from some stock, because I'm going to continue to manage my trades in a disciplined manner that's going to allow me to see those gains, pile on themselves. I don't know where I don't know what trades they're going to come from. When I bought RLGY, earlier this month, I didn't know that it was going to go up, 11, 12% on me. But I traded it and I managed it in a disciplined way and allowed it to surprise me. I've always believed, and I feel very strongly about this, is that if you manage the risk to the trade, that the profits will take care of themselves. If you manage the risks that are associated with the trade, the profits will take care of themselves. You got to take what the market's giving you. Early on this morning, the markets weren't giving us anything. It hit our max pain level. We had to get out of PCYC. It rallied after that, and it rallied higher and higher and higher. Now, I'm not adjusting my strategy just because it stomped me out. Okay, and I saw it rally higher. That's what people who have a history of losing will do. They will constantly adjust their trading behaviors and their trading plan and their strategy based on the last trade and what happened, based on the last losing trade. Okay. Don't be one of those types of people. Okay. If a stock goes up after you get out, who cares? Who cares? Okay. You followed your trading plan. Okay, and the profits weren't there to be made. Okay. Now you can always play hindsight 2020 and say, well, if I would have just held on. Well, why are you saying that? Because you think somehow you can apply that lesson from this trade onto the next trade as if it's going to repeat itself in the same exact manner. It's not going to repeat itself. You have to follow your plan. You can't question your stop losses. You have to follow your plan. You have to manage the risk. You have to manage the risk at the expense of the profits that might be able to be made on that trade later on. Okay? I've given up profits because I was not willing to take the risk. And because I do that, I am a successful trader. And you know what? I do not care what that PCYC went up $6 after I got out. In fact, I would assume, because I don't even really look at my stocks after I get out, but this one was pointed out to me. But I could probably look at some of the other ones that I got stopped out today and see that they're going at FTR. This was a $4 stock. I got stopped out at 421 and it's trading at 437. I'd be sitting on a profit right now. I took a loss on that trade. But see though, the profits, it doesn't have to come from FTR, and it doesn't have to come. It doesn't have to be a woulda, shoulda, coulda. If I had just held on, you have to play by the parameters that you set out for your trade, and that's what I'm going to leave you with. Okay, plan your trade, trade your plan. Y'all have a great evening.